As we're stepping into the earnings season, is the mood looking like this time around the numbers and the overall earnings for India Inc. could stand to be more positive than last time, or probably you will see a little bit of pain carrying forth before, at least in 1 or 2 more quarters, before we see a turnaround in terms of corporate earnings?
Well, I think it's going to be a mixed bag. I think the IT sector will still continue to show a good growth. I think the pharma sector will still continue to show a good bottom line growth, and I think the exports is something which will be something which will really drive the overall profitability of this sector. I think capital goods, possibly people would like to look more at the kind of order inflows they have got, and whether the liquidity position in most of these companies have eased in terms of the receivables or in terms of the intensity of the working capital business. I think by and large the banking will still have to face the hurdles of the NPAs. The core NII growth and the credit growth remains muted. So I think that broadly sums up most of the sector. I think the FMCG will still continue to see a dip in the volumes probably, and I think it's going to be a mixed bag. So once again it will be a little more stock specific as we go forward in terms of which companies are really going to do well.
Okay. For the index though, what's the overall mood setup as we, as this is a new year? Most of the commentary is around Nifty heading towards 6,500.
Well, I think that needs to be spliced into a run-up to the election and post-elections. Post-election is, I'm sure, it's anybody's guess and would remain more as a speculative kind of prediction. But in a run-up to the elections, I think markets probably will continue to see selling at higher levels. So I really don't subscribe to I'm not one of those in that camp who feel that 6,500 can be scaled. And it's not the question of just scaling, whether it can sustain around these levels at around 65 levels. My own sense is a gush of liquidity possibly will take it to 64, 65. But whether it can hold on to those levels, my own sense is no. There will be a good amount of selling pressure at those levels. And I think otherwise markets probably will remain around 5,800 to 6,300, 350. Or maybe 6,400 also one can a little more as a matter of abundant caution one can say. But this is broadly the range as what I would see. I think the key would still be whether the economic turnaround which a lot of people are talking about, the green shoots which people are talking about, whether we can get to see in this December quarter or maybe January, March quarter. My own sense is that it will still take easily couple of more quarters, much beyond the election, for some of the green shoots to emerge and definitely to say that that the economy is on a turnaround path.
Okay. So from a client perspective, from an investor perspective right now, if one has to look at building a stronger portfolio, which kind of stocks and names do you think one needs to add to it?
Well, I think it would still, the portfolio will still be a little more defensive with the possibility of a little more better returns should the markets really do well. So that being the approach, I think I would still go for something like an Infosys, Wipro, and maybe in the mid-cap space, something like in the IT sector, something like KPIT or maybe a Mindtree. I think in the capital goods sector, possibly Larsen & Toubro still looks the pick of the lot. That's a stock which can still do reasonably well, at the same time being defensive. Cummins India is something which I think one should look at. Lupin and Ran Bakshi looks pretty interesting from the pharma sector. I think in the mid-cap space, we can still talk about Britannia, we can still talk about something like a United Phosphorus, or maybe something like a Phenolics Cables. So some of these stocks possibly can look good in the mid-cap space.
Do financials hold a place in the portfolio? And does one keep adding on to a few specific banking names?
In the mid-cap banking, I would still look at something like a UCO Bank or an ING Bank. I think in the frontline banks, I would rather prefer to be cautious. Maybe this, if probably it is a well-known fact, but possibly I should just point it out, that in the calendar year 2013, in fact, when the indices have scaled to a record high, we will still find that the ICICI, Axis, and maybe HDFC Bank or even HDFC, all these financials probably have remained flat or have given a slightly negative absolute return. So I think that tells a lot of story on some of the banking space. So I still feel that banking is yet to get itself adjusted to some of the NPA problems. Maybe there could be some more NPA hurdles which we may see. So I would still play a little more cautious in the banking space and the finance space.
Okay. What's your call on how do you think the US taper will impact liquidity with funds slowly but gradually now the last few days have been slowly but steadily pulling out in the equity markets? How do you think that situation will shape up?
So there are two things. One is that the bond yield, which is hovering close to 3% in US, and second is the tapering impact. I think both the things possibly which had especially the FI flows, which had provided a very solid tailwind to the markets, probably even if that cools off, I think that will be a sufficient reason for the markets to start correcting. And I think on that particular front, I would still be a little more cautious. I would think that the flows will continue, will diminish somewhat. Now, whether the complete US recovery will be adequate to offset the tapering, I don't think so. I think if US really recovers in a big way, maybe a lot of money will still flow over there. So my own sense is that the FI flow probably should moderate a bit, and maybe in times of this election, run up to election, possibly it will cool off a little more, because we do not know how the situation is emerging with a lot of new parties taking a very extreme leftist views. So I think all this will play in the terms of the FI flows. So I expect that flow to be a little more modest and to moderate down.
Okay. Let's talk about pockets where, you know, it's not looking all that promising and the headwinds out there are still pretty strong.
You mean the sectors or the stocks? No, I didn't get you.
Sectors where, you know, there could be still more pain left, and it doesn't make sense to look at stocks within those sectors at the current juncture at least.
Well, I think the controversial sector and which still remain the infra space, which comprises of construction, which comprises of power, and maybe the capital goods space. So I think that you know, first round of optimism has been more than played out in most of the stocks. I think the second round of play out will be maybe if there are some sellout in some of the stressed assets, especially in this particular sector. So if there is some buyout or some takeover by, say, a domestic private equity or by some foreign funds, which will give some valuation and which can possibly have a very contagion impact on the entire sector, that is yet to be played out, and hopefully that will play out. So I think this particular sector is something which still remains a little more controversial at the moment, because the external environment still continues to be challenging, and except for Larsen and Toubro, as what I said, most of the other companies don't have the balance sheet to take the orders, to execute, or even get a bank funding to for the working capital to execute some of these projects. So I think this sector still remains something where one has to be absolutely stock specific, get into the nitty-gritty.
Okay. Would you put real estate in the same space?
I think in the real estate, I would still stay away from the frontline stocks, some of the big names. I think the mid cap space still offers a lot of scope out over there, whether it is Kolte Patil, whether it is Shobha, whether it is Prestige. I think some of these names still hold a good promise and potential of appreciating.
All right. In terms of looking at the defensives right now, you said that you need to have, a sharper bent towards defensives in the portfolio right now. I mean, that was the theme for 2013. But most now believe that, if you want to take a play on the upside, it's going to be the cyclicals and the beta names that are going to help your portfolio get that required boost. So in light of that, I mean, does it make sense to invest in these highly valued defensive stocks?
Well, cyclicals generally are, I don't really believe the cyclicals really have the potential to deliver a huge returns, because I still feel that maybe the external environment still remains pretty challenging. So some of these stocks within the sector, at best, you can have some momentum. There could be some price rise here, some price rise there, some pickup there and here. So I think all those things probably will give a good short-term boost. But I think on a slightly longer-term basis, I don't think that it's possible to say that they will really have a sustained good growth and a good demand. I'm not one of those who believe in that that's going to happen. So that's why I remain pretty apprehensive on this particular sector. And as what I said, maybe the cyclicals at best could be played as a short-term bet, depending upon what kind of short-term approach you have or what kind of news you have in this.
Okay. Infosys ahead of results, what are you factoring in, Dilip?
I think Infosys under Narayan Murthy has somehow or the other managed the expectations of the investors very well. So, even if the performance may not really match up, I think what you say about the future, what are the steps you are taking, also has a very important role to play how the stock is going to move. So I won't speculate ahead of the results, but I still feel that Infosys, even from the current level, can deliver almost about 18 to 20% return over next 8 to 10 months.
Okay, got that. And just one last word, right now, is the trend more drifting towards the mid-cap end, where you can look at quality names out there, because that seems to be what's happening now, where the mid-caps and small-caps have been clearly outdoing the benchmark index?
Well, I think in the mid-cap, as what you very rightly said, the caveat should be that it should be good names, and probably those which have been beaten or have not moved at all because of the way the markets were at the moment. So I think there are very few of them which really merits a look. But I think by and large, the way some of the mid-caps have moved in the recent past, I think most of them are based on some kind of rumors, which I believe they are all manufactured, and probably a little away from the reality or from the truth. So they are driving, because every day you get so much of news, so much of messages on your mobiles that some takeover is going to happen, some buyouts will take place, so somebody is taking a stake in this company, or some open offer is coming. So I think all those are really driving most of the mid caps. But yes, we still believe that we should concentrate on a few select mid caps, maybe a few of them which are already spoken.
Got that. Dilip, thanks very much for joining us. Really appreciate you taking out the time. Dilip Bhat there with his views on the market. Let's also get in Pankaj right now to talk a little bit more about what brokerages are talking about in terms of pre-result ideas. Pankaj, we've got CLSA as well as Macquarie putting out notes on where they're expecting strength and weakness.
So Devina, let's first start with CLSA. So essentially, it's a call regarding their Q3 numbers and how they would position themselves ahead of starting of Q3, which starts day after tomorrow. So what CLSA is saying, pre-result buy ideas, strong results expected over there. Names like Sun Pharma are on their list as market share gains will drive strong earnings. Axis Bank, they believe manageable asset quality pressure versus what the street is factoring in. HCL Technology, positive margin surprise is something what they expect. DB Corp, high ad revenue, state election impact to come in into these numbers, and that's why they believe they will deliver strong numbers. As far as the sell ideas are concerned, so they believe that Tata Steel numbers may not be that great because of the weaker domestic prices. Bajaj Auto margins may be slightly lower than expectations. PSU Bank's overall continued earnings decline is something what they believe will continue. On the other hand, Macquarie has done a bifurcation of 5-6 stocks, one on the buy side and one on the sell side. So let's first start with the stronger names, what they are suggesting, essentially strong set of numbers largely where it's expected. Tata Steel, JSW Steel, Sun Pharma, Tata Motors and Idea. These are the 5 to 6 counters that they have there where they are expecting very, very strong results to come in Q3. And where are they expecting negative earnings momentum or largely, slightly lower than, weaker set of numbers coming in. Ultratech Cement, Ambuja Cement, BHEL, IDBI, Union Bank, Petronet LNG. These are the names where they are expecting weaker than expected or negative earnings momentum to continue even in Q3.
All right, got that. Pankaj, thanks very much for that. Let's take a quick break on that note. We'll come right back. Surendra Srivastava will be joining us on the other side.